Right, so this is actually a very good question, right? It was actually examined in one of the years, right, as first assessment, all right? So when you look at this question, actually looking at the standard on how they can examine us. All right, so the first part, it says, draft an email to the finance manager of Ashanti Investment Limited as requested by the audit manager, all right, in which you discuss the following. All right, so for first things first, all right, as you guys can see, all right, they want you to draft an email. Now, how are you going to go about it? All right, remember, there's this one mark, which is communication skills, conclusion, and logical flow. One mark. Where is the one mark coming from? All right, what should you do in order to generate the one mark? So you should know the template, all right, or the layout on how do I draft an email. All right, so usually with regards to an email, you guys write emails almost every day. All right. So in terms of this, so they want us to do email, finance manager, of course. All right. Then, so remember with regards to email, it's directed to, all right, so you can write to finance manager. All right. Of course, here there is no email addresses and so forth. All right. You can say at something, it doesn't matter. All right. You can just say at maybe gmail.com. All right. That's fine. Remember, you know the email format, right? And then from, all right. Who are you? So you have to check in this scenario who you are, all right, and then you draft it like that, all right. Or you can just say Unisa at unisa.ac.za. All right, doesn't matter, all right. And then debt. So you have a debt. So we have 10 March 2023. Sorry, 2025. All right. And then you have your subject. All right. So then you write whatever you want to discuss. All right. So basically that's the layout with regards to an email. I believe you guys write emails almost every day. All right. So you should know the layout there. All right. But anyways, so it says draft an email, all right, to finance manager of Ashanti Investment as requested by the audit manager, in which you discuss the following: whether the strategic agreement, all right, between Ashanti Investment and Pilo Chemicals is a joint arrangement. So we want to discuss whether it's a joint arrangement or not. All right, if you recall in our previous class, all right, I did introduce you guys to what are joint arrangements. But also for starters, you should be in a position to understand. Remember, you're working in the exam with your IFRS books. So you need to know, where do I find information about joint arrangement? And also joint arrangement is governed by IFRS 11. All right, so you should be in a position to say, okay, when I'm sitting with discussion questions, where do I find information on joint arrangement? If you forgot which standard is joint arrangement, you go to your page of contents. All right, on your IFRS book, you'll find that they'll write which IFRS has what and so forth. All right, so if IFRS 11, right, that's where you find your joint arrangement. All right, and then assuming that the agreement is a joint arrangement, all right, how, right, so another tick, all right, another tip in the exam that you need to remember. So it does not make sense for the examiner to say, assume this is a joint arrangement when it's not a joint arrangement. All right? It does not make sense. So definitely when you see part B saying assume is a joint agreement, all right, then automatically it means for part A, your discussion should be in line to say it is a joint agreement. Do you guys see that? So because it does not make sense for the examiner to say in part A, discuss if it's a joint arrangement, then part B says assume is a joint arrangement. Automatically, this is a hint. They're trying to tell you that for party A, it is actually a joint arrangement. Of course, with regards to discussion, sometimes we can make the mistake and say it's not a joint arrangement. But in this regard, when you see a question like this, right, where B is in support of the joint arrangement, automatically you know that this is actually a joint arrangement. All right, so it says, assuming that the agreement is a joint arrangement, how it should be classified and measured in the separate financial statements of Ashanti Investment Limited for the year ended 31 March 2021. Communication skills, conclusion, logical flow, 1 mark. Part 2. Identify with the reasons that separate performance obligations contained in the contract between P Telecoms Limited and Vodatel Limited in accordance with IFRS 15. Revenue from contracts with customers for the year ended 20th February 2021. See, so this one, I believe it should be easy, right? About performance, separate performance obligation. You already should be in position to know that, okay, with regards to this, all right, does it have a standalone selling price? Remember, we mentioned that with regards to separate performance obligation, can it be sold separately? That was the hint. Of course, there's terminology that the IFRS give us and so forth, being distinct and so forth. But the first thing, the hint that I told you guys is you need to evaluate, can we sell it on its own? Is it separable? All right, that's what you need to know. All right, is it separately identifiable? Can we sell it on its own? If the answer is yes, then it means it's a separate performance obligation. Though to score marks, you need to discuss other factors, but your mindset is made up. The moment you see it as a standalone price, automatically becomes separate performance obligation. All right. And then B, for each of performance obligation identified above, prepare journal entries in the accounting records of P Telecoms, all right, to recognize the revenue from the contract with Vodatel in accordance with IFRS 15, revenue from contracts with customers for the year ended 20th February 2021. All right. Then C, discuss the substantive procedures to be performed to audit the amount of revenue recognized for the year ended 20th February 2021. Right. Now, what happens? This is an assessment, right? One good thing about an assessment is it's full of surprises. Now, these 4 months, all right, somebody would walk in and say, nah, this is auditing. All right, I'm not doing auditing. So what must I do? So in an exam, all right, one thing that you need to understand is the examiner wants everyone to have 100%, but they want to work for that 100%. So now it depends now which student went the extra mile. All right, the students went an extra mile. They understood what are substantive procedures from your undergrad. They're the ones now who get these 4 marks. Then the student who just did accounting, all right, they said, no, I'm going to write accounting. Their mind was set there. These are the students now that will be sitting on the 90s. Then the student who didn't really push hard, all right, they're just pushing, but not hard enough. They'll be sitting in the 60s. Then the others, 50s. Then the others, 40s, 20s, and so forth. But of course, with you guys, none of you guys will be below 50, I believe. All right. We'll definitely have to be above 50 there. All right. Let's go to this scenario and see. Right. So you're a senior trainee, all right, accountant at Kumalo and Shole Inc. And they've been assigned to the audit of Ashanti Investment. Ashanti Investment is listed on the Johannesburg Stock Exchange and there's a 31 March year end. The company manufactures a wide range of cleaning detergents and chemicals. These products are supplied to various mining companies in the Limpopo and Northwest provinces. Your audit manager has asked you to respond to an email received from the finance manager of Ashanti Investment as she is currently focusing on another audit report that is due in 3 days. The following is an extract of the email received from the finance manager. All right, so with regards to this, all right, since we have an email from the manager, so you can just say M Scott, all right, remember, here instead of writing it like this, all right, you can just say to M Scott, all right, so it's to M Scott at ashantiinvestments.com. All right, so you can write because you already have the email from this person. All right, and then you proceed. All right, agreement between Ashanti Investment and Philo Chemicals, 5 March 2021. Dear Boshokom, I hope this email finds you well and in good health. We have recently approached the management of Philo Chemicals to propose a strategic agreement to manufacture hand sanitizer. Philo Chemicals has the resource and expertise to manufacture the hand sanitizer, but does not have sufficient capital or facility to manufacture the products on a larger scale. This necessitates this agreement as Ashanti Investment does not manufacture sanitizers. The agreement was finalized on 15 February 2021. A separate entity named Senchem was formed on 15 February 2021. Senchem is a separate legal entity in terms of the South African Companies Act 2008. Each entity will have 50% shareholding in Sunchem, a strategic agreement which governed the operations of Sunchem was signed on the date of incorporation. The strategic agreement contained the following terms. A joint operating committee will be established and representative from each company will side on the joint operation committee. The decisions made by the joint operating committee require unanimous consent. All right. The companies will share the revenue from the sale of the hand sanitizer and incur direct manufacturing cost. So they incur direct manufacturing cost in a ratio of 50-50. And a separate bank account will be opened through which revenue will be received and shared costs will be repaid. The bank account is in the name of Sunchem. The appointment of management and decisions regarding supplies to be utilized are to be approved by shareholders holding at least 51% of Sunchem's voting rights. Now, what can you guys see before we go anyway? All right. Now, we said a joint arrangement. All right. I gave you an example of the GNU that's currently there. All right. We saw in the previous election there was no party that won with more than 50%, all right, of the votes. Now, what does it mean, all right, in regards to this? In order for this to be a joint arrangement, decisions should be made with unanimous consent or agreement. What does that mean? It means all the parties should agree on a certain decision. In other words, we're saying no one should have majority votes. Now, if you look at this question, do you see to make a decision, they need 51% voting rights. Now we have two companies. Each of these two companies has 50% shareholding. Do you guys agree with me now that these companies, in order to make a decision, they have to agree? Otherwise, no decisions will be made. That's a very good example of a joint arrangement. All right, let's go to IFRS 11 so that we can see now what I'm talking about. You guys have your books, right? So I want you to, all right, let's go to IFRS 11. All right, we now want to pass, guys. All right, we're talking about passing now. All right, so when you want to discuss about IFRS 11, all right, joint arrangement, I want you guys to quote from IFRS 4, sorry, paragraph 4, of IFRS 11, paragraph 4 up until paragraph 13. That's what governs the part that you need to discuss for now. All right? So, if you look at paragraph 4, it talks about a joint arrangement. It's an arrangement in which two or more parties have joint control. So the first thing that you need is joint control. All right? Now, you discuss, do these parties have joint control? You can agree they have joint control. All right? And then paragraph 5, it says a joint arrangement following characteristics. The parties are bound by contractual arrangement. The contractual arrangement gives two or more of those parties joint control of the arrangement. All right? Now, joint control, what is joint control? Is the contractual agreed sharing of control. An arrangement where exists only when decisions about relevant activities require the unanimous consent of the parties. Now, let's look at how did they answer the question. All right, in terms of this, I want you to generate marks now. Well, we have reached that stage. All right, so the part says whether the strategic agreement between Chantel Investment and Pillow is a joint arrangement. Let's go to their solution. All right. So, of course, they wrote this theory. There is no mark. As you guys can see, this email software provide you with what? All right, that's an introduction paragraph. Then, IFRS 11, joint arrangement is applicable to all entities that are partly to a joint arrangement. A joint arrangement is an arrangement where two or more parties have joint control. Where are they getting that? They're reading about paragraph 4, paragraph 5. That's what they're quoting here. All right. So a joint arrangement has following characteristics. This is paragraph 5. The parties are bound by contractual agreement, and the contractual agreement gives two or more of those parties joint control. All right. Let's see. Do you see? There's no mark so far. Theory dump. We call that theory dump. All right. You copy this This is coming from IFRS, direct. But UNISA is not awarding marks. Right? I know some universities, they could be awarding marks, but UNISA is saying, no, we're not awarding mark for theory dump. You got this from the book. Right? I'm going to show you where they award marks. Joint control is the contractual sharing of control of an arrangement, which exists only when decisions about the relevant activities require unanimous consent of the parties sharing control. Where are they getting that? All right. Let's go to IFRS 11. All right. Paragraph 7. You see, paragraph 7, joint control is the contractual agreed sharing of control, in which exists only when decisions about relevant activities require unanimous consent of the parties sharing control. That's paragraph 7. Now, is there a mark? No, there's no mark. Now, let's see. A joint arrangement will be an arrangement in which Ashanti Investment and Pillow Chemicals have joint control of Sunchem Limited. Now, you see, there's one mark. What is the difference with regards to this? I want you guys to go to paragraph 4. All right. This is paragraph 4 says a joint arrangement will be an arrangement in which, all right, it's an arrangement in which two or more parties have joint control. What did they do in regards to this? They replaced the word parties with Ashanti, the companies we're dealing with, and Sunchem. That's what happened. Sorry, and Pillow Chemicals, they replaced those. And then DC, they awarded a mark. So if you want to generate marks in the exam, do not write this. You're wasting time. All right? In the exam, don't write all this. Skip all that. All right? You need to skip this part. We call it theory dump. UNISA is not awarding you a mark. Now, the first thing that you need to do is replace where there is entity with the name of the company you have. Replace where there is parties with the companies you have there. That's where you can get your mark. All right. Good. So they're saying, no, a joint arrangement will be an arrangement in which Ashanti Investments and Pillow Chemicals have joint control. All right. Let's look at the next part. Ashanti Investment and Pillow Chemicals have entered into a strategic agreement at the incorporation of Sunchem to produce hand sanitizer. The relevant activities are those related to the production of hand sanitizers, as these determine the returns of Sunchem. What are they doing here? Application. All right. So they are applying. What are they applying? Remember, here they talk about the relevant activities. All right. Let's look at it. Where is that part? Joint control is a contractual sharing of control for an arrangement, which exists only when decisions about relevant activities require unanimous consent. So here they're giving us what are relevant activities. All the parties control the arrangement collectively when they must act together to direct activity that significantly affect the returns of the activities. This agreement set out the following terms upon which the two parties participate in the manufacture of hand sanitizer. Now, each company appoints a representative to joint committee. There's a mark. The decision by the joint operating committee require unanimous consent. 1 mark. Both Ashanti Investment and Pillow Chemicals hold 50% of the shareholding. 1 mark. All right. Where is this coming from? Let's go to the scenario. I don't want you guys to feel like, no, this guy, what he's telling us, I don't understand. I want you guys to see what is happening. All right. Do you see? A joint operating committee will be established and a representative from each company will visit on the joint operating committee. That's where the 1 mark is. The decision made by the joint operating committee require unanimous consent. That's where another mark is. The companies share the revenue from the self-sanitizer and incur the direct mention. Of course, this is about something else. All right. But do you see? This 1 mark. We highlight here. They're coming from the scenario. So it's more like you read your IFRS. All right? You have read your IFRS. Your application is coming from the scenario. IFRS is just saying, right, in regards to this, IFRS is saying, no, a joint arrangement is whereby the parties have a joint control, right? A joint control to direct the relevant activities. So your task, right, your task as a student is now to apply based on the information from the scenario, is the joint control, all right, to direct what are the relevant activities that they have, all right? What is the agreement that they have in regards to the contract? You list down that, you get easy marks. I don't know, before I proceed, is there anyone who feels like, no, what are you speaking? I don't get anything. Was completely lost. Is there anyone who's lost, guys? Okay, everyone is good. I'm happy then. All right. And then the appointment of management and decisions regarding supplies to be utilized in the manufacture of the hand sanitizer are to be approved by shareholder holding at least 51% of Sunchem and voting rights. Both parties have implicitly agreed that they have joint control of the arrangement because decisions about the relevant activities cannot be made without both parties agreeing. 2 marks. Where is this coming from? Yeah. All right. Look, the appointment of management and decision regarding supplies to be utilized are to be approved by shareholders holding at least 51% of Sunchem voting rights. See that? You get your mark. Just copying as it is from the way they presented to you, you get your marks. Is it difficult? It's not, right? We can agree there. The joint arrangement, when you see the question there, you should scoop the marks. All right. Then you're now applying. All parties thus must act together to direct relevant activities. That is the manufacture of hand sanitizer. Therefore, now you're making a conclusion. All right, based on your discussion, you're making a conclusion now. Is it a joint arrangement or not? Therefore, Shand Investment and Pele Chemicals have joint control over Sunchem, and the arrangement is a joint arrangement. 1 mark. You scooped your 10 marks, 10 easy marks, all right, that you have collected in regards to that part. All right, good. And then let's look at the other part. So the other part, it says, assuming that the agreement is a joint arrangement, how it should be classified and measured in the separate financial statement of Ashand Investment, all right, for the year ended 31 March 2021. So in terms of classification of joint arrangement. So last week, I know we did it probably in a rush, all right, but we said a joint arrangement is classified into 2, all right? We have joint operation. Yes, sir.
Hi, Ian.
Yes, sir, Ben.
I was a bit confused with the 51% and unanimous voting. Isn't that contradictory? Because, I mean, unanimous would mean like they have to agree fully, or is there something I don't understand?
Okay, so the 51% is saying decisions need to be made with 51%, all right? But now, all the shareholders, none of them is 51%. Remember, there are 2, all right? And each one of them is 50-50, which means there is no majority. That means decisions now has to be made by unanimous agreement. By unanimous, we're saying they have to come to an agreement. I don't know if you get the logic behind it. 51% is what's required to make decisions, but none of these guys is 51%. So which means decisions now have to be made by agreement, mutual agreement. Not sure if we're on the same page, sir. I understand you've done subsidiaries, you've done associates before, all right, in your undergrad. All right, well done. But here, we're saying none of the parties have control. Let's think about it logically. I gave you guys about the current GNU, all right, whereby I said, let's say ANC is sitting at 40%, all right, ANC. DA, let's say DA is sitting at, let's say 35%, all right. just as an example. And then let's say 30, 40 plus that give us 75. Let's say there's 20% for MK, all right? And then that take us to 60, 95, right? Let's say EFF is 5. All right, just saying random numbers, guys. All right, nothing personal. Let's say they come and say decisions. Okay, let's remove. Okay, let's remove EFF. All right, okay, I'm just gonna remove it so that we explain this example better. All right, let's say this one is 25 MK. All right, let's remove EFF so that our example come right. And then they come and say decisions are made by 85% votes. All right, decisions are made by 85% votes in parliament. All right, now, do you guys agree with me if ANC plus DA, if they combine their votes, they come to 75%, right? ANC plus MK combined, they come to 65%, all right? DA plus MK, they come to 35 plus that, 60%. Do you see? None of these combinations, which means now without agreement on these political parties, no decision will be made. Does it make sense in regards to this? If these parties don't come to an agreement, which we call unanimous agreement, no decision will be made because the three of them, all right, the three of them, they have to vote together in order for decisions to be made. The three parties need unanimous decision in order to make an agreement, a decision. They need unanimous agreement, all right? Does it make sense, guys, in regards to this? So we are saying,
Yeah.
in regards to this combination, none of these guys can make a decision on their own. They need each other. So they need to come together to make the decision. That's what we call unanimous agreement. So that's the same with the question that we are dealing with, all right? You find that there's no decisions needs to be made by 51%, but none of the guys, all right, or the companies or the shareholders we have there has more than 50%. So which means now automatically they have to come together to make a decision. All right. That's what we call a joint arrangement. Don't confuse. There's a difference between joint arrangement, subsidiaries, associates. All right. Soon you'll be looking at associates. All right. But there is a difference between subsidiary, joint arrangement, and associate. Joint arrangement. Yes, ma'am.
So am I right if when I'm done at paragraph 4, 5, and 7, then I go to B10 where it says assessing joint control? That's when I can just, because then it shows you the three things that must be met in order for it to be a joint arrangement.
All right. Can we all go to B10?
Where it says assessing joint control.
All right. So B10, all right, if you look at it. So B10, if you go to that small diagram that they have there, all right, what is happening under B10? All right. B10 is actually further explanation of what we have under paragraph 4 to 11. All right. What is happening? So 4 to 7. It says, does the contractual arrangement give all the parties or group of the parties control of the arrangement collectively. All right, collectively, it means the parties combined. Yes. All right, then you know it's within the scope of IFRS 11. Do decisions about the relevant activity require unanimous consent of all the parties or group of the parties that collectively control the arrangement? Yes. But what do you need to do? All right, what are they doing under B11? B10, I mean, is just to help you what forms part of the joint arrangement. All right, you can use that. There's no problem with that, Ms. Matapelo, but as long as you remember to apply the theory. So all you just need to say, all right, you're looking at, do we have control of the arrangement collectively, which is what we have where, all right, if you look at it, joint control, this is IFRS 11, paragraph 5. All right. So paragraph 5 says the joint arrangement with the following characteristics. The parties are bound by contractual arrangement. The contractual arrangement gives two or more of the parties joint control of the arrangement. So that's what this paragraph is just explaining. But if you feel like B10 does justice for you, it's fine. You can apply it. All right. But as long as the crucial words that you need to highlight is the joint control. All right. Is there a contractual arrangement? All right. There's a contractual arrangement between the parties. What was agreed on the contract? All right. They agreed that decisions needs to be made by 51%. All right. Now, the contractual arrangement give two or more of those parties joint control. Yes. All right. They need each other to make the decisions. I don't know if I did answer you, Ms. Matapelo.
Yes, sir. Thank you.
All right. Cool. Any other question, guys, before we proceed? Okay, good. So basically, that's what we have is joint arrangement. Now, let's discuss. So I want to move on now to what we call types of joint arrangements. All right. Now, we want to look at the two types of joint arrangement. So one, we said we have what we call joint operation. All right. And then two, we have what we call joint venture. Now, in simple terms, all right, in simple terms, not what's in the book, but in simple terms, what a joint operation? A joint operation, guys, all right, this is where the shareholders, all right, the shareholders are liable for the joint operation debts, all right? So these guys, they formed a company, but they're liable for the debts of the joint operation, all right? They share in the assets, revenue, and expenses, all right? They share in the assets, revenue, and expenses of the joint operation in proportion to shareholding. So these guys, all right, when the joint operation needs money, all right, the joint arrangement needs money, the shareholders needs to contribute for that money. All right, you have to take out, say for example, in regards to this, all right, let's say me and Avela enter into an agreement. All right, we said, oh, Avela, let's start our business. All right, we want to run our own company. And then if the company that we start runs out of money, all right, say we agree 50-50, Avela has to give back 50% of the required money. I have to take 50% of the required money. That's a joint operation. When this company makes sales, Avela is entitled to 50% of the revenue. I'm entitled to 50% of the revenue. When this company wants to pay employees, right, which is expenses, Avela is entitled to 50% of those expenses. I'm entitled to 50% of the expenses. When the company says we need equipment, all right, equipment to run the business, Avela has to bring 50% of the equipment. I have to bring 50% of the equipment. All right. When the company is in debt, Avela has to rescue 50% of the debt. I have to rescue 50% of the debt. That's what we call a joint operation. Now, what's the difference between a joint operation and a joint venture? The shareholders are entitled to net income or profit. All right, let's use the word profit, net profit. So the shareholders are entitled to their percentage shareholding. Of the profit and net assets. All right? Do you see the difference? Joint venture, we're not liable. The shareholders are not liable for the debts. Of the joint venture. All right? The shareholders are not responsible for the debts of the joint venture, which is liabilities. The shareholders do not share or do not participate on the assets. All right? So they do not share on the assets of the joint venture. So they're not required to share on the assets of the joint venture. That's how it works. Any questions, guys? Questions, guys? These guys see the difference between a joint venture and a joint operation.
So basically, sir, like in simple terms, a joint venture is like basically where they have like rights to the net assets.
Yes. Yes.
And then with the joint operation, they have rights to the assets, but they also have to fulfill the
Yes.
obligation.
Yes. Yes. So what happens now is under the JV, all right? Under the JV, what is happening under the JV? So joint venture, all right? The shareholders are entitled to share of profit of joint venture. That's what they're entitled to. So let's say the joint venture make a profit, all right? E.g., JV made a profit of, let's say 10,000. They made a profit of 10,000, all right? Me and Avela are entitled to 50-50. Let's say the company is Avela Pty Limited. Okay, not Avela. Yeah, let's say there's Avela Pty Limited. So the share of profit, so share of joint venture, all right? Profit. So Avela in the separate books will record 10,000 times 50%. So they'll record 5,000. That's what Avela record. Then NP2I Limited. How much are they going to record? So they're going to record share of profit, which is equal to 5,000 as well. All right? Which is different to joint operation. Of course, like I explained last week, that you guys are no longer required to draft financials on joint operation. All right? They changed the framework. All right? You guys are no longer required to draft there. You just need to know the theory part when it comes to joint operation. But let's look at it. All right? How was it supposed to be like? So under joint operation, all right, in regards to this, Avela Pty Limited was entitled to, right, was going to receive assets. Let's say it's equipment, right? So Avela will just have, if the equipment is valued at 50,000, so they'll receive 50% of this, right, which takes them to 25,000, all right? If the joint operation is sales, all right, Avela we have sales, be saying, no, the sales amount that we record, right, the total sales amount we're entitled to, maybe let's say it's 10,000. So 10,000 times 50%. They record this in their books, all right? So they'll record 5,000, All right. So that is the difference between joint operation and a joint venture. Joint venture, you only have two line items. Statement of profit and loss, you record share of profit of joint venture. That's it. Statement of financial position for joint venture, you record investment in joint venture. So investment in joint venture is made up of what? It's made up of amount invested in JV plus accumulated profits. All right? Accumulated share of profit. This 5,000 you're entitled to. That's what makes up what you call investment in joint venture. It's an asset. So, statement of profit and loss, you record the share of profit of the JV. All right? Statement of financial position, you just record investment in joint venture. So that's how it works with regards to when you're dealing with the joint venture there. All right, let's quickly look at this question. Quick. All right, see what's happening. So part B says, assuming that the agreement is a joint arrangement, how it should be classified and measured in the separate financial statement of shunt investment. Now let's see, what is the agreement? All right, in regards to this, all right, I want you guys to see something. Let's look at the assets, all right, liabilities, income, expenses, and all that. All right. So in terms of this, all right, a shunt investment in Pilochem will purchase the entire Sunchem Limited's product line. Do you see? They're buying, all right? They're buying the entire Sunchem Limited's product line in a ratio of 50-50. What's happening? So Avella is buying 50%, all right? EN is buying 50%. That's what's happening. Sunchem may not sell any of the hand sanitizer to any other party except to Ashanti and Pilo. Any shortages that the partnership may incur will be financed by both parties. Do you see? The parties are liable for the liabilities in 50-50 ratio. Let's quickly see how they answer the question. All right, in regards to part B. Now, assuming that the arrangement is a joint arrangement, how should it be classified and measured in separate financial statement of shunt investment with the year ended 31 March 2021? Let's go to our IFRS books. All right, remember we have our friends there. Look in the example with our friends there. All right, so now paragraph 14, all right, IFRS 11, all right, paragraph 14 says, an entity shall determine the type of arrangement in which it is involved, the classification of a joint arrangement, joint operation, or joint venture, upon the rights and obligation of the parties to the arrangement. All right. Now, let's see, how do they answer that? The rights and obligation of both the shunt investment and Pilo Chemicals to the joint arrangement by sales to determine the classification of the arrangement as either joint operation or joint venture. IFRS 11, paragraph 14. What do? Do you see? When it talks about each entity, they replace that. All right? They replace that with what? Ashanti and Pilo Chemicals. All right? So this is what I was telling you guys, that when you're answering theory questions, all right, do not theory dump. The textbook is saying the entity. Replace those words with the names of the company you're dealing with. Now, if you're smart, all right, if you're smart enough, what do? All right? If you're smart enough, what are you supposed to do? If you're smart, you're supposed to say, all right, how are you going to answer this question? You highlight where they're awarding the marks. That's how I used to do it. I saw that, okay, paragraph 14, there's a mark. I put a star. When I see a question on joint arrangement in the exam, what do? I remember that, okay, they awarded marks for applying paragraph 14. I do the application. That is, if you're wise enough, guys, that is how you do it, because at the end of the day, it's a game of generating marks. Now, you want to know there's a lot of paragraphs structured there. How do you know which paragraph to quote if you don't flag or highlight it differently? The advice is highlight the paragraph that you see the awarding marks. You can highlight, you can use a different highlighter, or you can start All right, we can just circle it. It's allowed in the exam. So that you know when you see a similar question, you know that, okay, I copy this paragraph direct from my book. This is the paragraph that will award me a mark. That is what a brilliant student will do if you want to do well in the exam. All right. Now, Sunchem is structured through a separate legal entity and may therefore represent either a joint operation or a joint venture. No need to go to B19. Why? It's still there. All right. Under 14. So you're saying no, it's either B and that. All right. And then let's look at the next one. The legal form of the separate vehicle is relevant in assessing the type of joint arrangement. Where is this coming from? Let's go to now let's go to B19 now. All right. So B19 says a joint arrangement with the assets and liability relating to the arrangement held in a separate vehicle can either be a joint venture or joint operation. All right. So you know that, okay, in regards to this, I'm already the mark. Then B20, what is B20 saying? Whether a party is a joint operator, joint venture, depends on the party's rights to the assets, obligation, the liability relating to the arrangement that are held in a separate vehicle. I believe you can quote B20. All right. With a Sunchem, you see this is B20. Is a joint venture or joint, or we depend on the Ashante's investment in Pillow Chemicals rights to the assets and obligation for the liability relating to the arrangement that they are held in the separate vehicle. See, accounting is easy, guys. When I tell you that accounting is easy, you just need to be wise. Can you guys start B20? All right, mark B20. Then you know that where it says party, you replace that with the names of the companies that you have. Now, Sunchem is a separate legal entity formed in accordance with the South African Companies Act. All right, the details as outlined in the strategic agreement will be considered. All right, now any cash shortages that the partner may incur will be financed by both parties in a ratio of 50-50. Where did this come from? We saw it coming from the theory. They gave us there in the scenario. See, they gave you. The companies, right, in Ashante Investment, Pillow Chemicals will purchase the entire Sunchem's product line in a ratio of 50-50. This is where you are. Do you see? Right? Where is it? 50-50. Any cash shortages that the partners may get will be financed by both the ratio of 50-50. Sunchem may not sell any of the sanitizer to any other party except Ashante Investment or Pillow Chemical, meaning that the cash flow from Ashante Pillow Chemical will be sufficient for the obligation of Sunchem. Ashante Investment and Pillow Chemicals will purchase the entire Sunchem products in the ratio of 50-50. It's there. The arrangement will therefore be classified as a joint operation. I think this, oh, this is the part. All right. Ashante Invest, okay. So they're saying no, the arrangement will purchase the entire. There's something that they skipped. All right. I remember. I think there's a point which they skipped as well. All right. Oh, this one, they did mention it. All right. I wanted this point. Any cash shortages may incur will be financed by both parties in a ratio of 50-50. All right. That's the point I wanted. All right. So they even included. So it's telling us, all right, that any cash shortages, 50-50. Sunchem may not sell. All right. And then Ashante Investment in Pillow Chemicals will purchase the entire Sunchem product in a ratio of 50-50. Where is it coming from? There. The arrangement will therefore be classified as joint operation, as each party has direct rights, the assets and obligation for their liabilities of the arrangement. Where is this coming from? Right? Where are they getting this point? Look, you did B20, isn't it? Do you see? In regards to this, all right, you did B20. Oh, if you don't want to go to B20, you look at, all right, IFRS 11, paragraph 15. A joint operation arrangement whereby the parties that have joint control of the arrangement have rights to the assets and obligation of the liability relating to the arrangement. That's what they did, right? The arrangement will then be classified joint operation as each party has direct rights to assets and obligation of arrangement, a liability of the arrangement. Ashante Investment should recognize, now they're telling you now, the accounting treatment, all right, in regards to joint operation. Where is it coming from? Paragraph 20 of your IFRS, all right, and a joint operation. It says A joint operation shall recognize and relate to its interest in a joint operation, its asset, including its share of any assets held jointly, its liability, including any share of its liability incurred jointly, its revenue from the sale of the shares, its share of the revenue. That's how you go about it. Anyone who feels lost, guys? Guys, questions? No questions. Okay. Can you guys promise me, because I know for a fact they're going to examine a joint arrangement. Can you guys promise me that you work on this question? One thing I love about this question, all right? It tests both joint arrangement, all right, and the types of joint arrangement. So you should do this paper very well with understanding. Right. Cool, guys. We're not going to waste much of your time, all right? We're going to do the revenue part in our next class. So, but I urge you, can you run through the revenue part or the joint arrangement part, all right? Then if you can probably run through the revenue as well. But it's easy stuff, all right? Life has been made easy. We've done this. And I'm positive that if you guys work enough, you go scoop very high marks, right? There are no questions. I can say, have a wonderful evening, guys.
Then maybe before we can go, there's examination technique under the question that we were doing. Can you please explain it to me?
Which examination technique?
The one under the solution that we were doing right now. Yes, can you just explain it to me because I can't understand it really.
I think I'm lost. Yeah.
Under part 1, on the last question, the one that we were doing right now.
Oh, you mean here?
Yes. Yes.
Oh, did you use your IFRI standard to assist in answering this question? The standard contained flowcharts to direct you on how to answer the required. This case, even though it is not explicitly stated that joint control is present in the joint control is implied as neither party can direct the relevant activity without the consent of the other. So what they're just telling you is exactly what we explained with Avella. Remember Avella said, how can there be unanimous consent, unanimous agreement when there's 51% required? Then we said, no, the unanimous agreement is coming in the sense that none of the parties has the 51%. So they need to agree in order to come up with the 51%. That's what the, in regards to this point, that's what it's all about.
Okay.
All right.
Thank you so much.
All right, please. So the point that I want you guys to understand is this is a game of how do you answer questions. Everybody knows what they're doing, all right? But not everybody is going to pass. So it's a game of saying, how do you answer questions? That's what will differentiate who's going to make it and who's not. Because theory-wise, I'm going to give you guys all the theory. I will explain it as simple as possible to an extent that you understand what's going on. But all I ask from you guys is improve your exam technique. That's all. If you do that, you're going to pass. Flying colors. Improve your answering technique. That's it. Right. Cool, guys. Have a good one, guys. I'll see you next week on this one. So we're going to be doing revision up until